So it's going to go through here. And here's what everybody's asking me. How rates are stuck in the mids. Will they drop or are they going to stay? So down through here, here's what we're going to post each Monday. All the data that we're going to get for the week. And this was kind of a brush just to go over a lot of data with you. But what I'm going to go over is the weekly calendar of events that's going to get posted, our thoughts, what the consensus is and the forecast is. And, we're going to track these things. So if you want to see what the MBS is, what is an MBS? Well, right over through here. So if you follow my channel and you're trying to really figure out what's going on with mortgage rates, this is what we follow right through here. We don't follow the 10-year Treasury. We don't follow just bankrate.com to figure out where rates are. This is the mortgage bond that trades on Wall Street. So what you have to do is you have to figure out and decipher, well, this is what the price did. What happened to rates? Well, because normally with bonds, you see a rate. Like the 10-year Treasury, you're seeing 4.162. That's the rate. So over here, what you have to do is say, well, what would this do to the yield? Okay, because the importance of this is the yield on this or the rate on this bond is the biggest component of your mortgage rate. So if this price is going up, which you're saying, that's great news because prices on a bond that go up means yields, or in this case, rates, come down. Well, the bigger the number up through there makes the adjustment bigger. If it's down 2, not going to really move much. If it's up 2, not going to move much. If it goes up 20, it's a move, and that will change and affect these things over through here. So that's our newsletter that we will post. And then last but not least, what's the Federal Reserve going to do at the next meeting? Hey, we did go over the economic calendar. What's the Federal Reserve going to do at the next meeting? And are they going to get all the data that they need if there's a government shutdown? Because the main thing that they focus in on is, like we said earlier, they look at the unemployment rate, or at least the jobs market, and where inflation's going. Well, this week we're going to get some of that data, but if they're shut down, what's going to happen? Well, let's still go over to the Federal Reserve FedWatch tool. What this thing does is it tells us, or at least helps predict or forecast, what the Federal Reserve is going to do down the road. So right now, what you have to understand is the federal funds rate is 4 to 4.25. They cut that 2 weeks ago. So if you go down through here, what's it expecting? Let's scroll down. So within 30 days, they're expecting the federal funds rate, a 90% chance to be at 3.75 to 4. Well, that means there would be a 25 basis point rate cut. But the bad news here is there was about a 10% chance there might be a 50 basis point cut because there were some numbers in here, but now they're over here. So there means there's a 10% chance the Federal Reserve might not even cut. Well, a lot of the data they're going to focus in on is going to be this time when it comes to the unemployment rate. And are we going to get that news because of a government shutdown? Only time's going to tell, folks. So stay tuned to my channel each day.